Hey, what's up, guys? Welcome to RoyalBluFX channel, where we teach smart money concepts. Today, we're going to talk about how to identify liquidity in three ways with adding psychology into our trading. First, I'm going to show you the three ways to identify liquidity, and then teaching you about how psychology works with liquidity. If you haven't already, please like, subscribe, and share this video with your friends. It definitely helps out the channel for future content. So without further ado, let's get into the video. All right, so the first way to identify liquidity is essentially just identifying your double tops and double bottoms. Now, why is that? The reason for that being is because a lot of the retail traders were taught to buy from double bottoms and then sell from double tops. Okay, so that's identified as liquidity. And more importantly, when retail traders are buying from the double bottoms and selling from the double tops, they're actually putting their stop losses below these areas right here, and that is what's known as liquidity, because money is being money is floating in these areas. So the way banks trade this is essentially going uh, where liquidity is. Okay, so if banks and retail traders are buying and selling here, they're actually buying. I'm sorry, they're buying here, and banks are pushing price up because they have the strength to push this market up. We don't, as retail traders, we don't have the strength to push price this high and this fast, but banks do. So banks are able to take your money out from the highs here. And now what are banks going to do after this? They're going to come going back down low to hit your sells, sorry, your buys, whoever bought in these areas, because there's money floating here. So in order for banks to make money, in order for banks to push the market even further, they have to take out liquidity. That's how the markets are moving. That's how they move, right? So let's look at some other areas in this case too, right? Here's a double bottom, here's a double top, right? What are the banks doing here? They're taking price back up, taking out these sellers. Now, banks are taking price down. They're taking the buyer's money here. You see, it's very counterintuitive. So if we understand this behavior, uh, the bank's behavior and why they're doing this, we can understand how to identify liquidity for us as retail traders. Here's another example. Here, a double bottom and a double top. The banks, well, look what they did. They took out liquidity here, and they pushed price up here to take out this liquidity, this form of liquidity right here. So this is how you can identify liquidity, is by simply identifying the double tops and double bottoms.